it's impossible to have negative trading days if you're actually trading. But if you're doing a riskless arbitrage and taking advantage of depositors, so with the advent of Bitcoin and crypto lending firms, I could convert my fiat to crypto, deposit it someplace. They would pay me 6% for a stable coin or 8% for Bitcoin. And then they would lend that out to people who wanted to use it for trading or other purposes. And everybody pisses on the lenders and, BlockFi and Celsius. Yeah, Celsius and Voyager, bad systems because of the token. FTX, bad system because of the token. BlockFi, actually a good system, defrauded victims of FTX, topic for another day. But that system was draining assets from the banks.
In his latest remarks, Mark Yusko, a renowned investor and the founder of Morgan Creek Capital Management, shared his insights on the current financial climate. According to Yusko, the recent surge in Bitcoin's value, which increased by 33% within a week, coincided with the shutdown of another American crypto-friendly bank. He acknowledged that many people may have been skeptical of such a prediction. However, Yusko also expressed apprehension about the banking sector's instability and its potential impact on the ongoing Bitcoin rally, which has been fueled by the Silicon Valley Bank's collapse. According to Yusko, the Federal Reserve's policies of maintaining low interest rates and quantitative easing had only aggravated the problem by encouraging even more borrowing. According to Mark, stocks may not be a suitable option in a low bond rate environment. Yusko also suggests that the Federal Reserve's primary objective is to benefit bankers. He further warns that when governments become despotic and corrupt, they are likely to fail due to excessive spending and debt. In today's scenario, governments are unable to meet their debt obligations amid declining trade and low interest rates, which does not bode well for their financial strength. Don't forget to subscribe to our channel to stay updated on the latest news and information. By hitting the bell icon, you'll receive notifications every time we upload new content.
Well, a year ago, they said, you know what? Balance sheets are good. Now we're going to fix your income statement. How does a bank make money? They pay depositors very little, and they charge their borrowers more. That's called a net interest margin, a NIM. And so if I'm paying depositors 1%, if you're lucky, and now I can lend or buy a government bond at 5%, oh, now that's awesome. Okay, but what happens if I bought a government bond and then interest rates go up? Oh, well, now I have an unrealized loss. So here's what happened. A week ago, you had a bunch of, and I use this term affectionately, Ash, dickhead venture capitalists, as a technical term, that sent out letters to all their portfolio companies inciting a run on the bank. And they're like, we were just being prudent. Like, no, you weren't. So you stumbled across this analysis, this guy did, that said, hey, there's a bunch of unrealized losses at Silicon Valley Bank. So they're bankrupt. Like, well, they're only bankrupt if everyone tries to take their money out at the same time, which you just caused by telling your portfolio companies to take their money out. That's idiotic, because those government bonds don't have credit risk. They are money good if you hold them to maturity. And most people don't need all their money today. What those companies needed was enough to pay their payroll, enough to pay their bills. They didn't need to take it all out. But by doing that, you forced the bank to sell those bonds at a loss. Well, now you are eroding the value of the gold. You are eroding the value of the equity. Now you're creating panic. And so just like JP Morgan fomenting panic at Knickerbocker, you had these venture capitalists fomenting panic in their own bank, right? The bank that is the backbone of wealth creation and innovation in this country. They back the companies.
U.S. regulators closed the Silicon Valley Bank after depositors rushed to withdraw their funds all at once. It was the second largest bank failure in U.S. history, behind only the 2008 failure of Washington Mutual. The current state of the banking sector has raised concerns with the collapse of 3 prominent banks, hundreds of regional banks facing outflows, and reports of the U.S. Federal Reserve creating a new backstop facility valued at a whopping $2 trillion. Additionally, Switzerland's central bank bailed out Credit Suisse with a massive $54 billion. As a result, there are clear echoes of the previous crisis, and the situation has become more alarming.
That set of crises always happens, or resolutions always happens on Sunday night. So same thing happened here. But it wasn't Silicon Valley Bank on Sunday this time. It was also Signature. Signature was just shut down. Why? Now, Barney Frank comes out and says, well, because we do crypto. Okay, that makes some sense. So this Operation Chokehold is, let's get rid of all the fiat on-ramps and off-ramps. So then, okay, now there's bids to buy Signature because it's really pretty interesting bank. I mean, they got kind of some crappy real estate loans. I would be careful of that if I were a buyer. But okay, pay a low enough price. Howard Marks has a great line. There is no asset bad enough that you can't fix with a low price. Conversely, there's no asset good enough that you can't mess up with too high a price. So there's a right price for Signature Bank. But here's the thing. The rumor was you couldn't buy it unless you promised to shut down all crypto banking. Basically now treat crypto like they treat cannabis. You're not allowed to be part of the traditional banking system, except in certain states where now it's legal. But ultimately, they're denying it.
Mark suggests that cryptocurrencies provide an opportunity to opt out of the current fiat currency system. However, he cautions against the idea of creating numerous cryptocurrencies, stating that each cryptocurrency has its own user base and serves a unique purpose. Thus, the notion that one can create many cryptocurrencies is unrealistic, as each cryptocurrency must have its own specific use case. He believes that such a network should be highly secure, and the Bitcoin blockchain, which has remained unhacked since its launch over 10 years ago, fits this requirement. According to Yusko, the Bitcoin blockchain's track record of security and immutability makes it an ideal option as a store of value network.
Cryptographic security. Bitcoin, by the way, is a crypto. And let's just be very clear. It is a cryptographically secure technology run on a blockchain. It is a crypto, even though you don't want to call it that. But this technology, I believe, is one of the, if not the great technology of our age. Okay. And I believe 100% it is an evolution of computing power that is as inevitable as computing was, the internet was, the mobile net was, the truth net, as I call it, is inevitable. There's no putting the genie back in the bottle. Decentralized is superior to centralized, right? The fact that today we all use money, right? I don't carry money. What do I carry, right? I don't even have it with me. I carry a black piece of plastic, this little card. Okay, what is that? That's a database run by a centralized company, Visa, and once every 30 days, they settle up with my bank and they go to the base layer of money. Well, not the base layer, gold is the base layer, but they go to the L2 Fedwire and they settle up. But that is a centralized system that is vulnerable to attack. I've had to change my Visa number because they get hacked. It's vulnerable to fraud or theft. There's huge trust, right? Just like the banking system is all about trust, right? I have a recurring nightmare, Ash, not like every night, but a couple times a year. I go to the ATM and I punch my code in and it says 0. How would I prove it's not 0? I don't have any statements. I haven't had a statement in years. It's their word against mine.
Mark is optimistic about Bitcoin's future, stating that the cryptocurrency may be on the verge of entering a new bull market. He further emphasizes the critical role of trust in the banking system. Thank you for joining our conversation today. We value your feedback, so please feel free to share your thoughts in the comments section below. If you found this content informative, please give us a thumbs up. To stay updated on the latest news and videos, don't forget to subscribe to our channel. We look forward to seeing you again soon.